Welcome to Theo Trade. This is Don Kaufman. Here we are on November 9th, 2016 with what can only be described as nothing less than one of the most epic point ranges that I've seen in quite some time on the S&P futures. I mean, this is right up there. First and foremost, where did the S&P futures move? You do the math really quick over here and you take 2028. You realize that's limit down. A lot of people have no idea what limit down even means, but limit down means they locked him up last night, a 5% move to the downside. Hey, come on. We were all told that if Trump gets elected, we're going to do nothing but crash and burn and the world is going to come to an end. So they lock him up and we trade all the way down. And lock him up means, again, a 5% overnight move. That's the most you can go to the downside. Except they only locked him up for what? A few minutes. And then we proceeded to rally. Get this, we're still open right now. That is 138 points to the upside inside of the S&P futures. And I have to say, last night, I traded a lot. Traded the S&P futures, traded options on futures over there. It was one of the busier trading sessions that I've had. I also want to point out that we're just coming close to a record here of the most S&P futures contracts ever traded, almost 5 million contracts traded in the day. But what's important from these levels? First of all, yeah, epic day. And again, I wanted to record this with about 20, so minutes to go left in the trading day over here because it's not over. All right, the volatility in here coming down hard and fast. Now, this is not just about the S&Ps. The epic movement to me wasn't per se the S&P futures. It's the bonds. And I've been short the bonds. I covered today. I'm out. I'm out of the contest. I actually covered my bond position, and I didn't get the exact bottom out there, but again, I have covered the bond position. I've been short bonds since near the 173 handle. I wrote them down right into about the 158 level, so we did cover bonds today. So again, just updating a couple of positions. Yes, I am massively short the S&P futures, but I covered some of the S&P futures last night just before limit down. Number two, I covered some of my bond position. Now, the thing about the bonds that you have to realize, people, that's a 5-point move. The bonds are well known, and you can look at the bonds and like what's called average true range. The bonds move on a given day about a point. Not necessarily from high to low, it's a little bit more than that. But when you see a 5-point move on a day, you got to start to recognize that this is like 4 standard deviation, close to 4.5 standard deviation movement on an intraday basis. One of the more magnificent moves that we've seen ever inside of the bond market. And the only thing in recent times we have to compare it to, of course, is going to be Brexit. Apparently, I just filled some of my TLT trade there too. Now, as the bonds are imploding, okay, and we'll take a little broader look at the bonds. Yeah, that's real, okay? As the bonds are imploding, what is it doing to interest rates? Interest rates explode to the upside. You realize that just back in July, the 10-year, this is the 10-year interest rate was about 1.33%. We just flew over 2% today. What does it do? Makes the financials explode to the upside. Now, interest rates, higher interest rates, good for the financials, maybe. Only in the short term do we actually believe that higher interest rates are probably going to be good for the financials and the financial products over there. But again, once more, another statistically significant move. That's a 4.4% move to the upside inside of the financials. However, the one thing that really needs to be pointed out today, it's not the range in the day. We expected dramatic volatility. One of the things that I've been preparing traders for in the days leading up to the election is it said constantly remain objective. Okay, there's going to be an epic trading session out there. There's no question. We took advantage of it. We covered positions. We added positions over here. It's been wild. Our ranges for the most part held very nicely, but again, there's something much more going on here. Again, the objective nature of trading is imperative because all you needed to do the last couple of weeks, block out all the noise. Again, every media, all the market pundits out there, 100% of them got it wrong. Everybody told us, again, markets are going to tank, with the Trump election over here. Yeah, we tanked and exploded to the upside. All right. On top of that, we heard that the exact opposite was likely to happen in bonds. Well, those imploded too. Financials would be in trouble. Well, those have rallied. I mean, literally, this is the opposites, if you will, in the marketplace. But one thing that really caught my attention, and I think we need to focus on moving forward, because that's what's important. It's neither here nor there. Hopefully you didn't get caught in the crossfire. Hopefully you guys recognized, the objective nature of the presidential election, where you can't get politics involved. You got to cut the noise out. You got to look at expected moves there, right? And we've been looking at expected moves in the SPX day in and day out to get a feel for these moves, and ultimately make a decision based on how much risk you're willing to take. Now, what's important moving forward? Sure, risk appears to have collapsed over here. Do not let it fool you. There is a massive bifurcation in the market. And what does that really kind of amount to? So one of the reasons I'm recording this during the market session over here is, let me show you exactly what a bifurcation means. You've got NASDAQ stocks, okay, for the most part, getting pummeled. Now, they've come back a lot today, but generally speaking, NASDAQ is weak versus the S&Ps. S&Ps are up about 1.2%. The generals of what have moved this market, the Facebook, the Apple, the Google, the Amazon, okay, they're all getting tagged today, along with Microsoft over there. The bifurcation is interesting because it is most definitively a sign, okay, of impending volatility. So if you think that we haven't seen volatility yet, great, maybe a 138-point move is not enough for you. There's more volatility on the horizon. You need to recognize that. What we're actually getting here is what we call convergence. Now, for those of you that have never seen this chart, I'm going to bring up a chart. I don't often, I'm not a big technical trader, but I want you to see the market differential. So what I'm going to bring up first of all are the Qs, okay? And we're just going to bring up the QQQ, and then I'm going to go over here to style, and I have a style preloaded, okay? And it's the QQQ SPY IWM comparison. And what I want you to actually see is what's going on over the last 6 months in the Qs versus the spiders versus the IWM. And I encourage you guys, bring this stuff up for yourself. Don't take my word for it. Look at this on a multitude of time frames. First of all, on the bottom happens to be the spiders, okay? Really, dead set in the middle over the last 6 months happens to be the IWM. And on top over here, but fading fast, is the NASDAQ. Okay, what does this mean? What we're actually seeing is a massive convergence, okay, of the major index products. Now, what that actually amounts to, and I've been talking about this for almost a year now, what it amounts to is if you look back over the last 5 years, the NASDAQ, and here's the NASDAQ, and again, I want to be very, very specific in labeling these so that everybody is aware of exactly what we're looking at. Up here happens to be the Qs, okay? It's in the middle over here, color coordinated, happens to be the SPY, and down below is the IWM. So those are the three main products. Compared over 5 years, you can see quite definitively the Qs outperforming the spiders and the IWM. There's no question about it, right? Qs are smoking the other products on the screen over there, hands down. Yeah, we'll take a look on a tighter time frame. Let's drop down to a 1 year, okay? How we doing now? Ruh-roh. You're getting a convergence. Now, what that basically means, what does a convergence mean? Back to a 5 year. What it means is the NASDAQ is either coming down to meet the IWM, all right? So the NASDAQ is coming down to meet the spiders and the IWM, or vice versa. These are catching up. Whichever way you want to put this, what it means is nothing less than sheer volatility, okay? Volatility is, okay, in play right now. And this is what I would term duration volatility. So look at it over 3 years, and over 3 years, you're still seeing the NASDAQ outperform drastically. Go into a 1 year, and you can see, okay, on a 1 year, wow, they're actually performing at exactly the same rate. All right, that's over 1 year, they're performing exactly the same rate. You want to get even crazier? Take it down to 6 months. Over 6 months, you still have the Qs barely outperforming the rest of the marketplace, but take a look at this. IWM is coming on strong, which has been the weakest product, right? It's clearly convergence. And let's have some more fun with this. Over the last 3 months, what have we seen in the last 3 months? Pure and utter chaos, where the Qs are barely outperforming anymore. Again, convergence is underway. This is most often met, I'll blank that chart, this is most often met with extreme bouts of volatility, which inevitably means there could be massive downside potential to the broader markets right now, and it's something you have to consider. Again, bifurcation is everywhere. When was the last time you go find a day where the S&Ps were up 25 handles, but only 70 stocks in the S&P, in the S&P 100 are actually up? Granted, this is an unusual day. It's a day of unusual bifurcations out there. I think you're going to see a lot of action in the days to come. I'll remind you, this Friday is Veterans Day. It's a banking holiday. Bonds are not going to be open, okay? So if you're going to get more volatility, it's predominantly going to be on Thursday. That's tomorrow. Again, here we are on Wednesday. Markets are absolutely rocking over there. Bifurcation is underway. Don't look at the volatility and think to yourself, it's all over. There's no volatility out there. We just went through a massive event. Of course, vol is coming off over here. But if you don't start to recognize stocks like Google that have been the leader, Amazon has driven the S&P 500 higher, along with Google, along with Facebook over there. Apple's kind of been the odd man out. You're not getting play in those. Where are you getting play to the upside today? Stuff like Caterpillar. Caterpillar's rocking to the upside. Goldman Sachs, okay? Not your usual suspects out there driving the market. How long will that last before capital just starts to rotate and duck and hide? Furthermore, keep your eye on the bonds the next couple of days, because bond Armageddon is possibly upon us. Again, I covered my position. My thinking for the next, week or so, I think we're actually going to see a rotation out of S&Ps back into bond markets. I covered my bond position, closed it, because I think the bonds are actually going to rally a little bit. They have been beaten up heavily in today's trading session. All right, look for the possibility of sell-side activity to permeate into the markets here. Possibly tomorrow, a little bit on Friday. Again, Friday, Veterans Day over there. But more importantly, inside of coming trade over here, do not get off your guard, okay? Again, volatility is everywhere. Just in the last few minutes, we're also seeing the S&Ps once again kind of back off here just a bit more. Thanks everybody for joining us at Theo Trade. Again, keep the eye on the ball over here as the S&Ps, tell me this is not volatility. The last few minutes, we've traded from the 2166 back down to 2159. Again, planning to crest through 5 million contracts inside of trade today. All right, don't get off your guard. Thanks everybody for joining us at Theo Trade. Have a great evening on what has been an epic trading day. Bye-bye.